It's my pleasure to, I'm Eric Toder. It's my pleasure to announce the next speaker, introduce the next speaker. He is Douglas Holtz-Eakin, who is president of the American Action Forum. He's been a guest many times at the Tax Policy Center, and we're always happy to hear him and hear the wisdom he's going to impart to us, although he claims he's not. Doug has held many hats. He's been an academic at Syracuse University and I think other places. He was director of the Congressional Budget Office between 2003 and 2005, and before that worked on the President's Council of Economic Advisors in the early Bush administration. And he was director of the chief economist for John McCain's presidential campaign in 2008. So we will hear maybe a different perspective from Doug. But anyway, I'm sure you want to hear once more what the destination-based cash flow tax is all about. So I'll turn this over to Doug, or anything else he wants to talk about.
Thanks, Eric. So it is always a pleasure to come to the Tax Policy Center, and I appreciate the chance to talk about this. I'm at a little bit of a disadvantage because I didn't get a chance to hear everything that preceded me, so I'm probably going to repeat things you've heard, and I apologize in advance. But I wanted to talk sort of broadly about the prospects for tax reform, beginning with echoing what Pam Olson said at the conclusion, which is there is a definite consensus that the U.S. corporation income tax has to change, that the status quo is untenable for the foreseeable future, and that we need to have tax reform. I think there's a near consensus that we are in an unusual political moment where it could happen in 2017. And one of the things to think about is what does it take to get that done, and where do we stand in that? And unfortunately, we have relatively limited data on tax reform in the United States. To go back and look at the empirical evidence, what it takes to get it done. We don't do this very often. If you think back to the 1986 reform, the way I think about it is that it really began in the mid-1970s with people like Bill Bradley and Dick Gephardt on the left, and Jack Kemp and Alvin Roth and Art Laffer on the right, arguing that the U.S. corporation and individual income taxes were so bad that they were damaging the economy, certainly, but also the very prospects of average Americans, and that the person on Main Street would benefit enormously from a change in the way we did business and an improvement in our tax systems. That public education went on for essentially a decade, and that attempt to sell that reached fruition with President Reagan running for re-election, promising to do tax reform, so a big political commitment. He won 49 states, so that's a pretty big margin of victory, even by Trumpian standards. And then, you know, he presumably had the mandate to get this done. The actual process of doing tax reform began with the Treasury putting out a volume which has become known with the scintillating title Treasury One. Must have been named by the CBO folks. Treasury One was a bold, almost pure, not quite, almost pure move toward a Haig-Simons income tax. It got modified quickly for some political reasons by the White House, became Treasury 2, got sent up to Capitol Hill, died several deaths, got radically rewritten over beer and in the Senate, and ultimately made it across the finish line. So a decade-long process to produce the Tax Reform Act of 1986, which then unwound relatively quickly. And I think one of the things to think about is not just what does it take to get tax reform? The other question is, how do you keep it? If you get to a system that is more efficient, does support your objectives, how do you keep that in place? So where are we in the 2017 effort? One of the things that I think it's fair to say about the House blueprint is that it is a bold, almost pure, but not actually pure, move toward a consumed income tax or a consumption tax. And that's a sort of similar starting point for the debate. I would argue that there's a very different set of factors in other ways. This is not the bipartisan effort we saw with Bradley, Gephardt, Kemp, Roth, Laffer education efforts, this has largely been driven by Republicans and with very little support from the other side of the aisle. It's also true that while Washington has become the world's largest floating tax policy seminar, and it's the happiest moment of my professional career for that, we haven't had the sort of vast public education that has led the average American to think, gee, we got to fix the income tax, particularly the corporation income tax. I think we're a long way from that. You know, as an aside, we did some polling and some focus groups leading up to the rollout of Dave Camp's effort at tax reform a little while back, just to sort of see what the consumers of tax reform were thinking about. And as it turned out, if you asked them the day after tax filing day, so on April 16th, when we did the focus groups and the polling, tax reform was about 8th on their list of unprompted priorities. What should the Congress be doing? It was way down. There was not a lot of appetite for it. And in the focus groups, we learned there were 2 words you couldn't use in discussing tax reform, and those words were tax and reform, literally, because they heard tax reform and they heard it. This is a trick. You're going to raise my taxes. And there's very little on-the-ground faith in this process and what it will lead to for them. So I think we're in a different place in 2017, for sure. Having said that, I think the same dynamic is important in 2017 as was true in 1986, and that is this comes down to White House leadership. Only the president can make the sale to the average American that this is indeed what will make America great again. This is what will have the economy perform better, raise their wages, improve their economic fortunes, the primary promise he made to them in running for election. And so where the White House comes down on this, what they choose to support is the crucial decision, I really think. Obviously, we don't really know at the moment. The House has been out sort of talking about its blueprint for quite a while. We're not really sure exactly where the president, the White House in general, is going to come down on that, but I think that's the key dynamic. I think the other thing that's a matter of, it's a matter of my judgment, but I really think it's true that if the forces that dislike the House blueprint and the border adjustment provision in particular conspire to kill it in its infancy, tax reform doesn't happen. It is absolutely imperative that the House go forward with something. It has to. The Constitution dictates it has to start in the House. This is the House proposal. There is no backup plan. They ended up with the blueprint because they looked at what Dave Camp went through and decided we have to try something that's radically different. We're going to throw away the distribution tables. We're going to throw away the adherence to an income tax and go to a cash flow base. We are going to dedicate this to raising the pace of economic growth and growth in the United States. And to go back and start over at this point, I think, is probably unrealistic. And so, as a matter of process, it may not end up being the House blueprint at the end of the day. The White House can shape it, and the Senate obviously is going to have its role, but it's certainly going to start there, or we're not going to probably get something in 2017. I think that's a fair concern about how things are going. I know that everyone has talked about border adjustment and the whole thing a million times. I just want to say a couple of things about the sort of political economy that's surrounded this discussion. So first, as a technical matter, I think a lot of the assertions and discussion about the border adjustment are misplaced. Number one, because border adjustment is not an end. It's a means to an end. And the idea that we're talking about tax reform to figure out what the value of the dollar should be is crazy. Tax reform is about the efficiency gains that Alan talked about, neutralizing the tax treatment of tangible and intangible investments of different lives in different locations. That's the heart of it. This is a means to an end. As means to an end go, it's an important one. It is the provision that protects the integrity of the tax base in the House proposal. It is the provision that stops the incentive to locate production abroad and eliminates the transfer pricing income shifting games in a territorial system. It's not the only way to do that. Right? We saw base erosion rules. You take your flavor A, B, and C. In the Camp world, Roseanne's minimum taxes, there are alternative ways to go at this. But I would say as a matter of thinking about the real decision is not, can I have the House plan or can I have the House plan without the border adjustment? The real choice that faces the business community is, can I have the House plan with the border adjustment or the House plan with some other way to protect the integrity of the tax base? And then you'll have if you could, maybe you want, camp option C. Now you've got a choice between something that divides the business community, is contentious and raises $1 trillion, and something that divides the business community, is contentious and raises. And so I think it's in better shape than a lot of people appreciate, and that in thinking about the economics underneath it, the claim should not be that the dollar is going to appreciate by 25% or 33% or whatever it might be. What we know is that the House reform would change dramatically the real incentives in the economy. It would affect the pace of investment, the allocation of investment, the location of investment. It would affect the fundamentals. Those impacts would take time. They would affect things like the real exchange rate and thus the current account. And I have no idea the magnitude and pace at which all that would happen. There's another thing called border adjustment, which simply says that other things being the same, confidence in the dollar, interest rates, all sorts of things, the dollar will be 25% higher than it otherwise would be because of the presence of this provision. That's a very solid claim. You can't come to any other conclusion, as I think Alan said. But that's not a claim that says, I know what the dollar will be after reform. I have no clue what the dollar will be after reform, and neither does any firm that's for or against the provision. I think it's been misinterpreted badly as a prediction of the level of the dollar. It's really not. Lots of things influence the dollar. This is going to be on that list. It's simply the economics of a compensating differential. The other thing that's become quite clear to me in the course of this debate is that the business community, and when you sit and talk with some of them, they really want the U.S. economy to perform better. They really want the pace of growth to be faster. They would really like to have better opportunities to compete internationally, but they really don't want to have to change their business model to get it. Those are utterly inconsistent, right? There will be, in fact, changes in business models. Broadly defined, the House blueprint would move us from a system that favors foreign production over domestic production to a system that's neutral. That's not a neutral change. And so in the grand reality of tax reform, there will be winners and losers, as there always will be. And what we're just beginning to see is the debate about those winners and losers. And they're focused on the border adjustment provision at the moment, but there's a long list of things to fight about, and the fights have just begun. I've been surprised at how little discussion the elimination of interest deductibility has gotten. I expect that's probably the next thing that's going to sort of get a lot of attention, and in the process, I think we'll go through the same debate that caused the '86 reform to die several near deaths on the way, and hopefully this one will get over the finish line in some form, and we will get a tax code that is less interfering in international competitiveness, a tax code that cements the U.S. as a low-tax jurisdiction with a single tax, not a VAT and a corporation income tax, but a tax that has better incentives for investment, innovation, and growth in the United States. Those are all desirable outcomes of tax reform. That's what we really need to get. Which little provisions are in there to get there, I think we should have less of a religious adherence to. So when I look at this moment, I think it's true that this is a chance to get a tax code that we desperately need, one that's ready for the 21st century and allows our economy to perform better. I'm always struck by the fact that from the post-war to 2007, GDP per capita grew in the United States at an average rate fast enough that the crude measure of the standard of living doubled every 35 years, and then under current projections, GDP per capita will grow slowly enough that the standard of living will double roughly every 75 years. And that difference between the capacity of an individual in one working career to see the standard of living double versus a future where it takes two working careers for that to happen, I think is a real devaluation of what has always been the American dream and the promise we've made to leave to the next generation a stronger economy. So this is the moment when that trajectory could be changed in a substantial way. And I think getting the House moving forward, getting the White House to make a commitment to what it wants and thus sort of settle and sell this to the American people is crucial. And then we'll see how this plays out. I do want to say I think that it's premature to take the sort of comments out of the Senate about the House plan as sort of a death knell for it. I mean, it really strikes me as, people are allowed to have their opinion about it, but if you were to imagine the president fully embracing, for example, the House blueprint and saying, this is it, I want this, it's hard for me to imagine that a senator could stand up and vote no when he's going to say, I'd really like to give you a tax cut, but that senator wants to preserve the ability of these firms to make their money off cheap foreign labor. I mean, the politics of that are horrible. So I think the Senate's going to be more malleable in the end game than people are thinking right now, because if the president gets on board pushing something, the capacity to influence both the House and the Senate is enormous. I think that's the key. So we can go back and talk about details of how we're going to tax financial firms or whatever, but I think the real issue is the political economy of getting this moving and seeing what the White House is going to support, and that this is an important year for everyone who cares about tax policy, but it's an important year more generally for the economy, for the capacity to improve the economic outlook. So thank you for the chance to be here. I know I was assigned a seat. I didn't read.
I think you were assigned this one, but it doesn't matter. It's
Okay.
fine. Just stay where you are. Okay, are we ready? Great. Okay, so we have a few minutes to take some questions. As the moderator, I'm going to take the liberty of asking the first question.
Fire away.
And this is actually a question that hasn't arisen all morning. We've been talking about details of how these plans work and how the border adjustments work. And what brought to mind this was I gave a presentation of tax reform in New Zealand a few weeks ago to the IRD and presented, among other things, some of the distribution tables that the Tax Policy Center did. And somebody asked me, how could Americans accept a reform like this that gives so much of the benefits to the highest income people? So I guess my question to you is, in general, talking about tax reform, how much of a concern is that, the distribution of the benefits? And what can be done to achieve the goals you want to do and make it more beneficial to average Americans?
So that's a really hard question. So I guess I'd say a couple of different things about this. And this is me talking. I mean, I'm just not speaking on behalf of the House Republicans or anyone. But my take on the reason they ended up doing something like this was they did watch the Dana Camp effort, which was, let's do what we think we need to do, which is get the corporate rate down, move to a territorial system, let's do it in a revenue neutral fashion, and let's do it in a distributionally neutral fashion. And they just decided it was over-constrained and you were never going to get something that produced the kind of dramatic impact on the growth trajectory that they wanted. And so what they seemingly did was say, okay, put that over there. That's not the way to go. Let's go to this thing which has been discussed for a long time, going back to blueprints for basic tax reform, Meade Commission. Let's take a look at that thing, and let's not worry about the distributional tables. Let's just make a dramatic tax reform. And they committed themselves to revenue neutrality. Sometimes they say budget neutrality, but sort of not raising the deficit in the process, and that's the set of constraints. That's what got him here. So it's important to recognize that I don't think there was a lot of explicit thinking about the distribution tables because they thought that was over-constraining the problem at the beginning. Second thing I'd say about it, it looks to me, and again, other people might disagree, that there's been an almost exclusive focus on the reforms to business taxation, the cash flow and border adjustment and expensing and all those things. Very little discussion of what's going over on the individual side, with the exception of the sole proprietors. People worried about sort of the compliance issues there. So I don't think there's the same political commitment to the rate structure, to the carve-outs they have. They have identified tax preferences for mortgage interest and earned income tax credits and education and retirement, things like that. And so it would be possible to look at those distribution tables and think about the individual side. It may very well be that the Senate has a much bigger impact on the individual side. I don't know. And then the last thing I'd say is that you can't solve all problems with tax reform. And so you better figure out what your primary problem is. And to my eye, at least, our primary problem is inadequate trend growth characterized by poor productivity performance, and that's harming the real wages of average Americans. And the biggest distributional impact you can have is to improve that. And so if you do that at the expense of some of the measured distribution in those tables, that's a trade-off that I at least would be willing to make.
Okay, thank you. Mr. Posen.
Bob Posen. So I'm interested in the reality question here. So we've heard a lot of concerns about the cash flow tax, and you're saying it may not even get through the House if they feel like they're going to get beat up in the Senate. The question is, what are the variants that could do it? I mean, theoretically, you could at least say, well, some sort of labor credit, wage credit that would then make it WTO compliant, or you could think of something more like Michael Gratz has suggested, which was a VAT, a more traditional VAT, and then use the money at a lower rate to reduce corporate income tax and deal with distributional issues. I ask you that because it doesn't seem like border adjustment is going to get through. And so what would be the likely variance that might get through?
So let me first of all be clear how I think about it. I don't worry as much as I forget, maybe it was John who worried about being BTU'd, this notion that you somehow take a tough vote and then get hung out by the Senate. I'm worried about the just basic dynamic that has stopped tax reform for 30 years, and that is there are winners and losers. It's divisive. Members go home, and they've got people beating them up from both sides every weekend, and eventually it's just too hard, and they say, forget it. And the only thing that changes that dynamic is not the Senate, it's the White House. It's the White House saying, this is what's good for the average American. We need to get this so that when they go home, in addition to those forces beating them up, they've got their constituents saying, hey, the president said we're going to do tax reform. Where is it? What are you guys doing? You need that, or it's just too hard for the members. That's the dynamic I think is important. In the absence of that, I think the House might have trouble getting through. Having said that, I don't think there's a realistic future for anything labeled a VAT, right? I mean, that's just politically too toxic, can't be done.
Even by another name?
Well, I think they should change the name to taxing value added. We have one TVA, we could have another one and probably get that through, but this is our approach to having a VAT, right? We've done it with flat taxes and with this, and I think that this is the realistic one. I don't think there's another. I really don't think there's a chance for another big restart to get through the House. I think if there's going to be something that comes out that looks very different, that for example sticks to a corporation an income tax base instead of going to a cash flow or something like that, it's going to have to happen in the Senate. I think the House is locked in. This is their proposal. They're going.
Okay, before the next question, I want to remind the online audience to please submit your questions to events@urban.org. Thank you. David, I know you.
Doug, do you think the prospects for the blueprint would be better if they dropped the individual portions of that blueprint and just went forward with a destination-based cash flow tax? Just, in other words, limit tax reform to corporate.
So corporate only?
Or to business, however you want to view it. Would it have better or worse chances?
I think it's hard for the president to get behind that, having promised tax cuts for average Americans on the campaign trail, right? That looks like a big renege by the one person you need to have on board. So I don't think that helps, although in some small ball areas it might be useful, but I don't think in the big picture. Maybe I've misread the evidence of history, but I think you just cannot underestimate the importance of the White House air cover for the Hill and the political capital they have to spend to get this done. And I don't see why they do that on something that doesn't have some on the individual side.
Taking all the questions to one side of the room, but go ahead.
Hey, Doug, Rick Newman, Yahoo Finance. Is it possible to get this done in 2017? And if it goes into 2018, is there any harm in that? What if it even goes beyond 2018?
Well, I mean, it's possible, but you can lose a lot of money betting on something getting done in the Senate. So, you know, there's just not enough floor time for the agenda that they have. I think that's another reason why I worry about if it gets pushed off, delayed in the House, whatever, it just doesn't happen, because the number of things the Senate is in principle going to have to do, between funding the government for 17 and 18, raising the debt limit, confirming all the appointees, confirming a Supreme Court justice, border security, in principle an infrastructure plan, increased military spending, got to change the caps on the Budget Control Act. I mean, I can go on, and you know, there's just, the scarcest thing is Senate floor time. And so it could very well, you know, not hit the August target that both Ryan and Mnuchin have mentioned as what they think is the end game. I would certainly expect them to come back after the August recess and probably have some work to do. I don't think it's a good idea to have this start running into 2018. Tax reform will have winners and losers. It always does. The last thing you want is the losers running ads in your district and or your state. Everyone's going to be cognizant of that, and so the pressure will be on to get it wrapped up and know where they stand at the end of 2017.
What do you believe the dynamics would be if they do this through budget reconciliation, what do you think the dynamics would be if they do this through reconciliation, which is most likely thing, with the idea that this may unravel in 10 years if the political politics don't change? And would that support, like Pam's idea, maybe we should do this halfway and not get rid of everything, get rid of all the business processes that people set up to comply, and then all of a sudden the thing's back to where we were?
My reading of the sort of continual emphasis by Ryan and Brady that this be revenue neutral is they are very conscious of the potential for Byrd rule violations in reconciliation, and the last thing they want to have to do is have this thing sunset in 10 years. They want a permanent reform. And I think that's an important issue, because this is another place where, taken at face value, the White House coming off the campaign is in a very different place than the House proposal. And you can go through the lists, you know, 15 versus 20, territorial versus, you know, worldwide, revenue neutral versus not. And so knowing where the White House is going to come down and what kind of air cover they're going to get, I think is crucial.
So, Doug, just one basic question on the House. So there was earlier a debate here about this question of whether the dollar would adjust sufficiently to offset the...
The answer is absolutely yes.
Well, that's not my question. My question is, as a practical matter, if there is some element of uncertainty about it, are House members going to be willing to take the chance and vote for something like this if they're not sure that that this dollar adjustment will occur as advocates proclaim?
John Buckley, I got the feeling John Buckley had doubts about that.
Yeah, no, look, big tax reforms don't happen very often for a reason, right? You are basically undertaking a major policy risk deliberately, because you think the return's going to be worth it. But there's a risk. There's no doubt about it, and that's true in this case. There will be risk on both sides. If you just focus on the dollar piece, the exporters benefit, the importers don't if it doesn't fully adjust. And so, you know, that really is going to depend member by member on how they think about that. I think that, you know, it's those kind of inherent risks and getting it from both sides that's killed it in the past. Usually. Big problem. But there are things that, you know, are now sort of becoming better understood that I think are sort of making people more comfortable. I mean, this isn't something that was invented in some science lab. It's out there in 160 countries around the world, and those countries seem to have pretty vibrant retail markets, and things have gone on pretty well. It is true that, you know, no one in the House, for good reason, spent a lot of time paying attention to the dollar, but the dollar's 25% higher than it was 30 months ago right now, and emerging markets haven't melted down, and everything seems to be okay. And so as they move from thinking about this as a sort of paper exercise about the tax code to a more economics exercise about getting what they want, which is better performance, I think they're going to, sort of have to immerse themselves in some of these experiences, and we'll see if that works or not. I mean, I believe as a going-in proposition, the odds of tax reform are always less than 50-50, and that's true this year. You need to get these other forces lined up in the White House and so forth to get it over the 50% line, and that's not happened yet in my view.
So, Doug, you mentioned in your talk the effort that went on before 1986
Yeah.
with many years of public education and debate. And one could say in 86, you had a tagline that said, we're going to get rid of all these awful tax shelters and everyone's rates are going to come down as a result. What is the parallel effort that's been done to prepare the ground for this tax reform?
I don't think
And
there
what is the tagline that can be, or how can this be done without a public education?
So I think it's a serious issue. I don't think there's been the same sort of concerted effort from both sides to convince the average American that tax reform is a good idea for them. I think there's been a superb effort at educating how bad the corporation income tax is, particularly in its international tax components. And I think that's been an education largely in the elites and in Washington. So to substitute for that, I think you need, the only person who can do it is the president. And that's a very different dynamic this time around. Because, at least my reading of the evidence is, we haven't had the Democrats being interested in comprehensive reform at all, right? They've put things forward on the corporate side, but they have not talked at all about doing individual income tax reform. So now we're in a world that they haven't even talked about, and one where the public hasn't been engaged. So it's a political opportunity, but it's not like you have the same sort of preparing of the ground. And so it's going to be different.
We have time for a few more questions. Howard.
Doug, could you talk a little about how you think the health reform debate is going to affect the tax debate? You're talking about White House support. It sounds like the White House is going to have to use up a lot of political capital on health care even before it turns to taxes. So how does that all go?
Next question. Look, you can do the political arithmetic. Repeal and replace is the largest entitlement reform ever undertaken. That's going to take an enormous amount of White House leadership. At the end of the day, they're going to have to pass something that is going to be. It's not going to make them happy. It's going to be sort of a grudging, we got to get this done, get it over the finish line kind of moment, and that's going to be tough. And tax reform, I believe, is in many ways going to be comparable. And so where does the White House put its political capital? And could it, for example, decide that on the merits, tax reform is more important, we need better economic growth, this is something we talked a lot about, and pull the plug on repeal and replace? Is that politically viable? Your answer is no, my answer is no. So I think they really have to think hard about where they use the White House. I expect them to essentially let repeal and replace be much more a congressional problem and let the White House sort of take the lead on the tax reform piece, but we'll see.
Yes?
Sorry.
The White House support is so critical to getting the passage of the whole package. Wouldn't it be good to sell it to the president to say that if we don't get at least the King's Hinter adjustment, we do have import shutting down and exports being promoted for a umpteen-year period? Wouldn't he be much more favorably inclined toward that kind of a sales pitch that one that say, oh, this vehicle Senator goes into to change the structure of the U.S. economy toward the rest of the world?
So I don't know, but I have a very strong opinion about that strategy in general, which is that's committing what I believe to be the greatest sin that staff in Washington commit, which is try to trick your principal into doing the right thing, right? That's a terrible thing. You should tell them the truth about what the policy is intended to do, what you think it will do, and then let them decide. But misleading them into doing the right thing is always a mistake.
It's not misleading.
I know exactly where the equilibrium of the border adjustment piece is. I don't know what will be the pace at which the U.S. real economy adjusts to the reform, in part because we haven't actually seen a reform. We haven't seen a bill. We don't know the transition rules, phase-ins, phase-outs, all things that are going to matter. And so in light of those things, the White House staff can then make an informed judgment, and that's the way the decision should be made.
Do you have a question? Any other questions?
You asked what the tagline's going to be. What would the tagline be?
Tax reform to make America great again. Come on.
Is that enough?
Probably.
Okay.
Probably.
Okay, so anything else you want to say, Doug? Otherwise, we'll wrap up.
I just want to say I think this was a tremendous contribution to the discussion about the tax reform. You know, it's been, in my view, of a very mixed quality, and this was a high quality morning where the issues really got laid out, and I thank the Tax Policy Center for doing it.
And we want to thank you for your contribution. It's really been terrific. Thank you.